casts off before the show. We don't want anybody thinking anybody got hurt. Let's go ahead and just don't look like you got hurt, okay? Yeah. Got the makeup on the black eyes and stuff. Hey, welcome to the Closing Beat, everybody. Happy Monday. How we doing out there? Looks good, sounds good. We're here to talk about the stock market. But first, we went skiing for the first time. I mean, we, two Florida boys and the whole team here went up there. And I don't have much to, be egotistical about. I'm just kind of an average guy. But we own that mountain, man.
Yeah. Well, you especially. I mean, you did the Black Diamond. I mean, that was incredible. But you had the courage to go do the Black Diamond. I thought that was awesome.
I shouldn't have done that, but got a little bit of the harder slopes in there. Cody did the snowboarding. I chose not to snowboard. I saw everybody falling down and stuff, but nailed that.
Snowboarding was very hard. That was very hard.
It looked tricky, yeah. But that's not for me, but did the skiing thing. We had a great time. Hope you guys had a good time without us. We're back. We're doing this all over again. That's what we're here is to talk about the stock market. And I'm just going to make this really simple today. This is an easy one to figure out. Don't overthink this market here today. And I'll tell you exactly how all this works. I do not care much for opinions, so I'll be sharing actual examples and be able to kind of point specifically to what we're talking about. But you likely saw the stock market head higher over our little break there, and then today as well. Right? Although we started a little bit lower, you saw the markets head higher, and I kind of want to go over why that was, right? Also, we've got our Wine and Wealth coming up this week. Actually, another great class coming up. Every Thursday, we do a class for clients. Hope you'll join us for that. And maybe we can make this one public if possible. I don't know if I remember how to do that, but otherwise it's in your portal. You can come in and just check it out there. We also have tax trick articles, not the general stuff that you see on YouTube or whatever. If you go into your portal, you can actually see there are 2 of them there. And I'm really making an effort. My whole New Year's goal is to be using that more. So when you log in, there's something to learn while you're looking at your account or maybe coming to a class or something. So plenty more of that coming. I'm working on considerations for market volatility. That's probably what we'll talk about this week in our Wine and Wealth class. How do you make the most of it? And how do you actually, well, not panic from it, but when there's more volatility in the market, what check boxes do we need to go through so that you could say, okay, not only am I, working through this, but I'm also going to make the most of it and actually hopefully benefit from it rather than just sit there and go, whoa, the markets are moving around. All right, so let's talk about the markets here. We don't need to take a lot of time to do this. It's pretty simple. You can see the stock market was up across the board here today. If you look at the S&P here, let's think about this for a second. Why was the market headed higher Friday and today? I've heard everything. I came back to a ton of emails. I love it. My favorite email is, I know you're out of town. Hope you're having a good time. But hey, when you get back, So I have a full inbox there, and I love it. I'm not picking on anybody. I do love that. But I got a lot of emails on, hey, some big firm covering their shorts, or the insiders know something, or they made their profit, they're buying back positions. People are buying this dip, everything from conspiracies to, we had a 10% pullback and stuff. It's actually pretty straightforward, at least as of now. And you really want to be careful with this market because this is the one where they pull the rug out from under you, right? So the first thing to talk about is there's basically no chance we go straight up to new highs, right? That would be my bet, and that is my bet, right? So there's no chance we just go straight to new highs. Think about what would have to happen there. We would have to just assume that tech stocks are worth more than they were before, even though we know rising rates are coming. We know cost to borrow is more. We know we have inventory problems. Think about what caused this drop here. So there's no chance that those reset to prices that would be before this pullback. Tech stocks are what we will need in order to get the markets to new highs all over again, and there's no reason that those will just take off and go to new highs. It would mean that everything that just happened in the last 2 weeks was a lie or was somehow false or inaccurate, right? And that's not the case. We obviously know the Fed has been clear with us and has kind of told us that. If you look at the stock market here, the average stock is down 9%. That's before today. So 9% year to date is the average loss. And if you just randomly pick a stock, your average would be 9% down year to date. The weakest ones were those that started off 2022 with the highest valuations, the most international revenue, and the highest short interest individually, not as a combination there. Now, we had January as a pretty volatile month, right? So number 2, we have a market that's pulled back about 10%. That's a big enough pullback to cause your 401ks, your mutual funds, people that manage those for you, our funds here, it's a good enough reason to cause an imbalance in your allocation. And a great way to talk about it would be the one that everybody says, 60-40, right? There's always this 60-40, stocks to bonds. Well, let's pretend that you had that for a second. If you had 60% of your position in stocks and there was a 10% pullback, that means that you are no longer 60-40. You are something like 50-50 or, what, depending on what you have. So you were supposed to be 60-40, and now because of just the market's movements, you are now 50-50. There is a need for mutual funds, yourself, your 401ks, whatever. There's a need to bring that back to 60-40. Well, add to that we actually haven't had a big move in a long time, right? So there has been no need to rebalance in any mutual funds or anything like that, minor adjustments, but nothing big. And all of a sudden we have a need to rebalance that also happens over 1 month, right? And so it's the end of the month. We get this sort of rebalancing effort, and that's part of the reason the markets were moving higher. Normally 1 month wouldn't cause an action, but when 1 month has such a large move, mutual funds, all their alerts go off. We have the same alerts here in our funds where all of a sudden we're out of whack. Nothing bad, nothing great. It's just we're out of whack. And if we want to participate at the same speed and keep moving along the way we were, we have to rebalance. Well, rebalance means the stocks that had done well are going to fall, and the stocks that have done poorly are going to go up. So here's a great example of that. We'll just keep this real simple. You want to see proof of the fact that this is all just rebalancing for the moment, which is dangerous, because, again, the rug can fall out from underneath you there. Let's look at what did poorly today that has done well. And I just made a little list here. Marathon Oil, a lot of energy stocks actually did bad today. How can that be? Oil's up to new highs. It's up 1.5%. Strong uptrend here. Remember, don't fight the trend in oil. So Marathon Oil, why would that not be higher today? That's a stock that has done well that today did poorly. That's rebalancing, taking money from something that did well and putting it into something that's done poorly. Not saying you would have done this, but Etsy. Why would Etsy go up just out of nowhere, right? It was like the immovable stock that just kept rolling down the hill. And today, sorry, Louie, I bumped Louie, man. You all right? So why would it just go higher? There's a number of these different stocks. Roku's one of them. Oh, I'm sorry. Here's another one. Why would Roku all of a sudden just try to bottom out like this? Because stocks that did poorly got the money today. Stocks that have done well did not. You've got Archer Daniels, just to show you we're not picking all in the same category here. Archer Daniels, a little pullback today. It's not the end of the world, but why would this one not participate in the rally? It's strong. M&T Bank, right? Done poorly today. Kind of started to roll over a little bit early there. Lockheed Martin, here's another one. Why would these stocks not do well? It's because money has been moving into Algin. There's nothing, this is Invisalign, there's nothing that would suggest today is the day Algin has a 7% move, right? There's nothing to suggest Enphase. You see these guys? Enphase, Solar Edge, things like that. Just all of a sudden, why would they bounce? It makes you think, maybe I should buy that stock. Oh, wow, something's happening here. What's happening? Check the news. There's nothing happening. It must mean I'm supposed to buy the stock. No, it's just temporarily rebalancing. It's money coming into that position that came from maybe a Lockheed Martin. A few dollars come out of one, a few dollars go into something else, like Solar Edge. What's the news? What happened, right? Did they get a new CEO? Did they get a big contract? No, it's just higher because of rebalancing, right? So that's the exact reason. It's really that simple. And you would do the same. If you go into your 401k and you say, rebalance, I wanted to have 70% here and I wanted to have 30% here, right? And now all of a sudden you're 60-40. You hit rebalance. That's what happens when you hit rebalance. They intentionally go in and they sell some of the winners, and they take that money and they put it into the losers. That's what's going on in the market there. Now, if you're looking at the S&P here, don't overthink it. This is a really simple day. We had an S&P that was also extremely oversold. We have the counter trend bounce happening. There are traders in there that said, yeah, it's a good try. I'll take a shot. Let's see if this bounces. I like it in the ultra short term. I worry about it because there's no chance we're going to all-time highs. So what does that tell you, right? There's no chance that whatever you bought has a profit that's greater than X right here, right? Somewhere in here is the maximum potential profit for buying this dip and suffering the back and forth and having that fun there. Where is it? Now it's a guessing game. So everybody's now in the same position going, I took a short-term trade, or I thought this was the bounce, right? Everybody's got their shot. They bought something. It starts going up. As soon as you start to see weakness, first you have the short-term traders, the back and forth day traders, swing traders, whatever. They take their profits and run. Then all of a sudden you have, oh my gosh, wait, was that not the bottom? Are we going to go lower? Holy cow. And you get the rest of the selling there. So that's what I mean by having the floor dropped out from underneath you there, or getting the rug pulled out from underneath you. Add to that, I'll pull this guy up here. We'll just zoom in a little bit so you can see. This is a weekly survey. I think it's AAII that still does it after all these years. Weekly survey of investor sentiment. Are you bullish or are you bearish? So the higher the number is, the more bullish people are. The lower the number is, the less bullish you are. Well, we've hit a point here where the bulls had all but thrown in the towel. We're at basically all-time lows here. So people are less bullish than they've ever been. The reason I point that out, this is known as a contrarian indicator. There are actually algorithms that trade against you answering the survey there. And so people are saying, I'm not bullish. I'm nervous. This is crazy. The market's falling. I'm very, very nervous. The survey is done every week, right? So this is really as of last week's data. So you can understand why that's the case. Now, it's a contrarian indicator, and we're all the way back down to these lows back in March or June of last year, right? So same thing. You have, although it's a contrarian indicator, you have that sort of stuff leading into your favor. When people are the least bullish they've ever been, the market bounces, right? And I don't have a way at the moment to overlay this, but we'll do that. We'll have some fun with that to say, when we have certain extremes down here, how often does the market bounce? It's actually quite a bit. Do I have the data? I don't have the data with me, sorry. So we'll do that. We'll focus on that one as something to look at next. Also, if we look at the stock market, this is a 10% correction. Do you know that when, oh, I'm sorry, here you go. Do you know when the stock market, the S&P, corrects 10%, that the average correction is actually just about 19%, right? We're looking back to 1990 in this case. Go all the way back to 1990. When you get a 10% pullback, anytime you tell a system, go find me any 10% pullback, it's actually going to find you an average of 19%. So that could be this pullback, a little short-term bounce, and a continued pullback. I really think you got to be considerate, worried, focused, on alert for the possibility of the rug getting pulled out from underneath you there. So very, very careful there. Anyways, if we look on further, we'll go to the Nasdaq. You got a little bounce there. Obviously, this one was very, very much oversold in the short term. Today's leaders happen to be the beaten down stocks. There's your Chinese stocks. Pinduoduo, out of nowhere, 12%, best gainer in the Nasdaq. Baidu, what happened overseas? Nothing. Nothing happened, right? It's just these are the cheap ones that got beaten down. Same in the Nasdaq. There you go. You can go through all of them, actually. And actually, let's go into semiconductors. Beaten down semiconductors. They got their bounce. I actually did not get my, I told you microchip was my favorite that pulled back. I actually didn't do anything with it. I totally forgot. I was out of town. I didn't get a trade on that one, so just to let you know. But beaten down. It gets bought. Huh. Isn't that interesting? All the Nasdaq funds, your big large cap stock funds there, right? Look at some of the weak stuff. Walgreens actually was in the news. They're if you're looking for to do an I forget what they call it, international conversion, right? Remember that was big. A corporate inversion, that was what it was called. That was the name they gave it years ago, where you're basically based overseas, so you don't have to pay tax. Walgreens is giving you that opportunity. You could buy their Boots division. Anyways, there you go. So weaker stuff. Weaker stuff today was stuff that was stronger overall, that had given you a chance at rallying there. All besides, I would say, Kraft Heinz and this CSX, if you're looking at the NASDAQ. So a couple outliers there. If you're looking at the Dow, we won't take too much time on this. Same thing, oversold bounce here in the short term. You got Boeing higher off some news from Qatar Airways, I believe it was. Yeah, got a big order there. Good for them. That's what they needed for sure. You got Salesforce.com. It had been pulling back, had been beaten down. Wasn't that magical? right? That's your big gainer today. And you know why that sticks in my head? Because that's where the day traders go. When you notice that kind of rebalancing and you're a day trader, that's where you trade for the day. You don't bother looking for other stocks, right? You could probably, if any of you sign up for day trader programs or whatever's out there, I bet you anything that's where people were. They were at those stocks today, playing those long. Disney got a little bit of a bounce as well. You got Apple moving to new highs. Actually, Apple's quite strong. I would give them give them some strength there. And you get what I'm saying there. So, right, that's what you have. Looking elsewhere, you got gold with a slight gain today, but it's going to be down about 1.5% or so for the month of January. Refuses to do anything. It is currently showing you it is a horrible hedge against inflation and has shown no signs of wanting to do that. We talked about oil sitting almost at new all-time highs. Nobody cares, right? So it's more expensive. Really expensive, actually. A lot going on there. Before we do new highs and lows for the day, I did close out to wrap up some of this. Now, we are starting the live trading here in our new point, like you can see. But we'll be starting that, and I'll go over those in real time, of course, and we'll show everything. I really want to make that a very transparent thing, right? And so that's coming up here, but I do want to update you on some of the things that were closed. If you want to join us on our research site, jazzwealth.com/research, we'll be doing a live class there. I don't know about daily to start, but I got some classes to do ahead of that. Nonetheless, if we look over here, closed out Netflix position today. Had sold the 350 puts, gave me a little bit of grief, got 67% of the total profit there. Cody's play on Planet Fitness turned out nicely there. Got 51% of the total profit. That is now closed. And just to show you, it's not all bells and, or all, what, Tinseltown, or what's the saying there? Not all sugar cakes and rose plums, or, you know what I'm trying to say? It's not all sugar plum fairies and peaches and cream.
It's not all good.
It's not all good. That's probably the way to say it. So just to show you, it's not all good. Shopify. I did this one before. I had the 1,080, 1,070 spread there. I did not like that one. I rolled it and. Maybe it bounces, maybe it doesn't, but this is one where it ended up with 5.5% of the total premium collected there, and I'm just not going to take the chance, right? So just walked away on that one. Not really a big deal. That is all the changes that we made here today. Lots of good things moving around. Newmont's the only one. Well, it came back a little. I got the $60 puts on Newmont trying to play momentum that didn't exist. Turns out it's what I get for trying to play gold. And more on that to come as we get our new show set up there, so be on the lookout for that. New highs and new lows for the day. There were 7 new highs, no new lows. You're going to find that the ones that did well in the energy space or utilities were the ones that made new highs today. EOG Resources, although a little extended here in the short term. Williams Brands did hit new highs. I kind of like that it broke out to highs and it's not extended. That's different. You're not seeing that everywhere. When you see a break to new highs right now, you got to question how extended it already is. You're up 10%, and then you're breaking to new highs. Kind of interesting there. ExxonMobil is a great example of that, right? Breaks to new highs, but how do you get excited about buying that right here? It makes you feel a little nervous. Southern Co., which is a utility company, breaks to new highs. I like that one. That one looks pretty good as well. Very slow poke type stock. So is Con Edison, but waking up here over the last couple of days and it hitting new highs. Great dividend paying stock for those of you that like that sort of thing. You probably already own it. Stocks in the news here today. There you go. Bed Bath & Beyond, 4.5% gainer on the day. You got some inventory level issues there. Who was it? The Wall Street Journal or Barron's or somebody? I read this. They did a study on shoppers and found that their biggest concern of shoppers was the level of inventory in the stores there. What may have moved the stock today, though, was they are going to sell off some of their patents. They hope to get about $800 million for that. And so that was in the news. Netflix, very helpful for me, has about a $42 gain on the day. The CEO is saying, I'm a buyer, right? Turns out he bought stock on this drop here, totaling $20 million. First time he's actually bought Reed Hastings, first time he's bought stock since 2012. So he sees this as a severe discount there, and I appreciate that he did that. Speaking of discounts, old Kathy Wood looking at Robinhood. Well, she's not looking at it. She bought 2.4 million shares at this price here, And I don't know. I think that's definitely going to help put in a bottom here, but Robinhood needs something unique about them to justify their current, even this current price. I don't see it. I don't know. Maybe you get a little trade out of it. So that's for the ARK investment fund there, ARK Innovation Fund. Otis, one that we happen to own here. Otis in the news. They beat on earnings. Guidance was okay. I was hoping for that to be sort of off the charts. They didn't give me that. But still, stock's up 3.2%. Hopefully this gets something going there. And Citrix, if you happen to own them or work for them, they are being sold. I think a private equity group, was it Elliott? I should take better notes. Elliott is one of the private equity groups that is buying Citrix. $104 a share is where I currently see the news there. That's what drove the news. And Spotify, one of the beaten down stocks that got bought, but it also helps that it got an upgrade here today, thanks to Joe Rogan, all that mess, right? Getting a lot of attention. If you're following it, you know what it is. If you don't, then just know that the analysts looked at it and said, that's a good thing, all that controversy there. And so the stock was higher by $23. That's a big move for Spotify, and hopefully that is a bottom of some kind there. All right, coming up this week, earnings. Remember, it's earnings season. We got all this going on, and these companies reporting earnings. You got Pulte Homes. I think that'll be a good one there to take a look at. There's a very unique way they're going about their business lately, and that business is going well, as you might have noticed. Black & Decker is going to report. UPS, ExxonMobil, AMD, one of the semiconductors, to report. EA Sports, which has had a rough go of it here lately. They beat 84% of the time, but they're only higher 2 of the last 8 earnings reports there, so that's a tough one for them. You got Gilead reporting. They're also known for being a weak stock on earnings, just from memory here. Let's see if I can show you. So we've got earnings down here at the bottom. See how weak on earnings. There you go. Slight gap down, not a big deal there. You got a big gap down there. And here's one just to show you a difference. See, you got 1 move higher on earnings out of the last 4. If you look back, a total of 8, that is the only and 1 move higher over the last 8 earnings reports there. So just, something to keep in mind. If you see it lower on earnings, that's normal. That does happen for them. Also, you got General Motors, Alphabet, PayPal, and Starbucks will all report after hours tomorrow. So got a big week, man. Got a lot going on out there, but we will keep track of it. And now you know. Why did the stock market go higher today? Well, that's an easy one to tell. That was a no-brainer to just kind of see that and go, okay, I don't have to fight it. I don't have to come up with some excuse. We have a reason to believe it. We have a reason to prove it. And you can actually go see that as well. And that's what I like. I like to be able to see the data, to be able to see what people are thinking. I don't want to guess, right? Look at all you guys. You're out there buying and selling, doing your thing. I don't want to guess what you're doing. I want to see what you're doing. So that's what we try to focus on here. Roku was one of them, that got the boost from a beaten down stock that got a little rotational money there. Looking good. You used to love Bed Bath & Beyond. This is going to sound a little weird, but I actually used to like going into that store right around the holidays, because you're like, I don't know, like what soup spoon to buy the missus, but I've got 40 of them to choose from, and it was kind of cool to just look at them for a minute. I don't know. I thought it was fun. But our stores around here now are kind of bare intentionally. They're trying to have less choices. That's been a while for them. Yep. Andres, is this just a dead cat bounce till we hit resistance and then get additional? It could be. Yeah. I mean, that's what and I hopefully made that clear here today. There's just no reason to be back up here. So if you already know there's a clear ceiling in place, well, do we just chop around and go sideways for a while, make our way through earnings season, and then somehow we start absorbing in those higher interest rates by March, which isn't far away now? I don't know, right? I don't know what comes of it. I don't know if we pull back or go sideways, but I feel very strongly that we're not going to new highs. And if we do, there's no chance that's a reason to say, all is well, let's just bet everything and keep going higher. That would tell you something's wrong, in my opinion. My humble little opinion. Yep. Hopefully this is some kind of a bottom there on Roku. It sure seems like people are trying to find, it's like Baidu. Baidu and Alibaba. People are trying to find their spot on it, but they're not committing to it yet. So hopefully this forces people to commit. Reza likes the lesson. Oh, cool. I love it. Well, thank you. Appreciate it there. Hopefully I didn't miss any of your questions if you had them there. Alibaba is up 9.16. Well, that's another one, and this is where we come into a really tough market here, because are you being misled by the market and by, tech stocks lifting the way here temporarily, the weak stocks getting a little bit of a bounce? Are we being misled, or is it truly going to prove to be an opportunity? And I'll be the first to admit that this type of bounce in the market, I don't study those enough. I don't know. All I know is you can't justify a reason to all-time highs. And so if you have no fear of missing out on something, there's no hurry to buy something or build some kind of portfolio or do whatever you like to do. I love it. Man has over 100 million and buys the... Well, it's 170. Just, we're counting numbers there. There's my ego. How about that? I started off saying I don't have an ego. And I only say that because other advisors that are like, they got the suit and tie thing going on, we're bigger than them, and it just frustrates me how they pick on me so much. So I never take that out on you guys. The industry as a whole picks on me, and so I just try to give them the finger whenever I can. Miriam, why do we do this daily review when we don't? Why do we do? I like doing the daily review. It's also a point to mention how things are going with clients. A lot of times the positions that I mention are ones that we own in our portfolios. But I like keeping updated. I'm going to be here anyways doing it. So that's it. Whispers of a negative January jobs number coming. Not whispers. They were setting the tone for it, right? I don't stop just because I'm skiing down a hill. So I was reading on my phone and stuff, and I was like, oh, here we go. Every administration does this. This is not political, but they all do it. When they know something's not going to be great, they try to throw an excuse out ahead of time. I don't know. I'm not a conspiracy guy on that. I just happen to see patterns, and that's kind of the pattern you see, Harry. Very fascinating. Yeah. All of a sudden, there's a new, different type of, I don't know if it's an Omicron variant or how they're talking about it, but they say, well, that may hurt the jobs numbers. Maybe this hurts the jobs numbers. So we lower the bar before the bar is released. Yeah. I know. What's the strongest semiconductor? Well, I don't know. That's a good question. I don't know what, and that would depend on the time frame as well. Are you saying the strongest semiconductor today? Probably not, because that'd be pretty easy to figure out. You're probably saying in general, which is the strongest one out there? I'd probably lean, as far as the pressure building, I'd probably lean towards Xilinx, if you had to give me one, right? AMD's not quite there yet. It's a little bit of a counter trend bounce, so I'd probably say where it looks like the pressure is building to the upside would be Xilinx. Yeah. Yep. You see 3 rate increases of 1/4 to 1/2 would be a bit much. I saw they floated the idea of the 0.5% today just to see how we'd react. That's why we started the day down. I forget what Fed president said that. He didn't actually say that they would raise by 0.5 point. He just said that he thinks the market could handle that. I think he's very honest and probably accurate. Every day is a little different. Just ask the AMC holders, yep, and GameStop and stuff. I get that question a lot. Are we actually ever going to bounce again on GameStop? Why? Why would they need to be? Yep. Thanks, Joe. Your oldest follower, Miriam? I think I remember you saying your age at some point. I appreciate you following. Yep. WMB, that's a good question. If you see where would be the next resistance area, that's what I like about it. So I was talking about this a minute ago, them and Southern Co. Right? So you have one of those clear, hey, it's a new move to new 52-week highs. You really don't have anything for a couple bucks to take a look at. I clicked the wrong button, so I'm hurrying back. There you go. So you have nothing really until like 32.5 to be worried about up here. You have the ability for the stock to actually have a move like that. In other words, it hasn't exhausted itself just to get here. There's still room. It's not extended. So that's the kind of thing I would look at there. It's not like a home run. It's going to go to 50 bucks. I mean, I think like 32.5 would be reasonable. And there's no, you could see like, look over here. It's all this stuff. You get the move to new highs, and then there's just, you get yourself a little bit more before it gets too extended. You get the move. Well, in this one, you didn't really get it, but hopefully you get what I'm saying there. But we'll see. I think also, and if you'll bear with me, I think most of the price targets are around 34, 35, which is good. So if you're shooting for the 32.5, let me just be accurate about that. Price targets range from 35 and 36. Yeah, so there you go. You always want to have the public perception of higher prices than your target, if that's possible. And I think that is where we stand right there with that one. Yep. What can you own today for 10 grand that the wealthy, probably some kind of weird NFT or something? Like some painting that you don't actually own, but that you can sell because you own the digital version of it. I don't know for sure. I mean, what is the thing? Land. You go on Digital World NFT or whatever it is and buy Disney World and then sell it. It's probably done already, but you get what I'm saying. Kevin, be careful with this. Yeah, I'm very familiar with them actually. They with the familial background there. And Kevin does it. Yeah, Kevin guessed it too. He said, just go buy an NFT. Beanie Babies, are you showing your age now? Yep. I would be the one to say, like, I don't know, like, you know, the first edition Contra on Nintendo. That there's my age for you. All right, I won't bore you anymore with my age and all that stuff. Hope you enjoyed, right? A little bit of a lesson today. We'll see how tomorrow goes. I will not be here tomorrow. This will be the one weird day that I will be missing the show. And that kills me, but it'd be daddy-daughter day that I forgot about, to be honest. So have to make good on that one. So we'll take care of that. And we'll see you Wednesday, but enjoy the rest of your day. And thanks for watching. I love that you guys are here and are interested in everything. We'll keep rolling. Adios.